believers, color warriors, welcome back to the Christian Market Watch. This is your host Chillie, and I'm so happy to share this vlog with you today. Another day, another time we get to share together and encourage each other in this economic uncertain time to walk in keeping our faith. This is my sincere hope for this vlog, so let's get started. Today I don't know whether I wanted to entitle this vlog Keep Your Eyes Open or Keep Alert, because there's a lot of moving parts that's going on. Why don't we start with a bit of economic news? I think that's a good one to start with today. The first one I have written down here comes as no surprise to us. It is none other than the food security issue. Once again, this is another crisis that we did not have to suffer. Here is the IMF, the International Monetary Fund. What they're really trying to say in this June edition update is that war is the reason why we're having this food crisis at the moment. And we all know that war is not necessary. Now, there's another crisis. This is the next one that's coming, and it's hunger. You and I all know that this is just a crisis to crisis to crisis economy that gives the US government and also central banks worldwide the excuse to print more and more and more money, and therefore debase the value of our money so that our money is worth less and less, and our wages cannot keep up with the rate at which all of these debasement is happening, and therefore we are getting poorer and poorer. So this is the whole picture here. I hope that we haven't lost touch throughout the weekend. Cost of living is going up. UK consumers are buckling under the cost of living crisis. But then there's another article that actually tells us that Australians are also starting to suffer from this as well because of what's happening in the US and the UK. This graph we have on the left here is the Eurozone's PMI. It's the Purchasing Managers Index. What that means, basically, when the PMI is above 50, it's in an economy where the purchasing managers are confident. It leads into economic expansion as they're happy to spend money to buy things that will then contribute to the inputs of whatever their output product finally is. So if this index is below 50, then the economy is going in a contraction. And what this usually tells us is on the industrial side, how inclined they are to keep producing. And so when this index drops, you know that the recession is coming, because this will eventually flow into what us, the consumer, sees or have available to us to consume, basically. So June here, what we do see is a slowdown. Needless to say, that is not good news for us. This is a headwind to the consumer side of things. Similarly, this is the one for United States rather than the Eurozone, and this just came in this week. This fell to 52.4 in June from 57 in May. Zooming out to the graph of the same thing, now we can see this is quite horrible. It's never been this low since COVID times, really, back in 2020 when everything first began. So we thought that at least now, as things get opened up, the economy is getting better, but really it is not in the manufacturing side, which means that if manufacturing drops, there's less for people to consume, and that is a key driver of inflation, as supply is reducing but demand is either the same or increasing. Similarly, this one is for Australia, and it is down to 52.4 in May. We don't have June data yet. Just as we thought that the economy is getting to recover in Feb, March, April, nope, sorry, right now, because of all of these fears and recession and inflation, is completely dropped back down again. This is a key indicator that the pain that we're feeling right now is not going to stop. It is in fact going to continue for a long time, and we really need to keep our eyes alert, open it wide, and prepare everything that we can possibly think of, and give ourselves, our family, our finances the buffer it needs. Please start preparing. And if you haven't watched my videos on how to prepare for recession, I will put the link in the description below and probably on the card up the top as well, and I hope that you really look into it. Please, that is the beginning of my thoughts. And obviously, since I recorded that video, I already started to prepare a lot more things, especially in food. So I hope that you take that as a stimulus for your own thoughts and your own preparations, so that none of us gets caught out. That's the whole point. We have this series that we spend this time together, you and I, so let's keep going. In the US, what we're trying to see right now is Netflix is cutting 300 jobs in the second round of layoffs. That is after Elon Musk has announced just a couple weeks ago that Tesla's cutting 10,000 jobs. That's a lot. So you can see all these major companies already starting to cut jobs. An interesting thing that I read about this week, across multiple countries, for major countries at that, country by country, one at a time, they're now starting to abandon clean energy, if not forever, at least temporarily. And they wanted clean energy, like renewable energy, to be the base load, the bulk of its supply of all of the nation's energy consumption and use. But they find that compared to coal and other more reliable sources like coal or nuclear, this wind and solar energy is just not good enough. There's not enough storage capacity, as we were sharing in the previous video. It cannot be relied upon to provide, say, 90% of the base load of what it takes to keep these lights going. During peak hours especially. Germany's abandoned that, China's thinking about abandoning that, Australia's thinking about abandoning that, the EU is thinking about abandoning that, especially because they're having problems getting energy because of the Ukraine war. Once again, it highlights to us that clean energy, whatever they were thinking, was just a nice little dream that they had. So once again, a lot of these things that politicians always harp on about, like clean energy, zero emissions by 2030 or 2050, you know, these things are just political agendas really designed to make a sector of the economy make money. And it's not really because they really believe in renewables so much, unfortunately. And we really need to just face up to the truth that this is what's happening to us. You know, not buy into everything that the mass media is telling us. You and I all know that it's a propaganda ministry. I was listening to a podcast by Robert Kiyosaki and also Raoul Pal, and they were talking about how quickly can the economy head into severe recession. They touched on something that I found really interesting. It's a quote. It says the bull goes up the steps slowly, so a bull market and upward market goes up the steps slowly, but the bear jumps out the window. And what they're really saying is all of these years with cheap money, that's allowed a lot of businesses and the bull to go up the steps for many, many years now. And now we're at the turning point where it's the bear and the bear is jumping out of the window. They're expecting that the recession can happen as quickly as 3 to 4 months. And most of them are expecting a time frame of about September, October this year in the US. And we know now quite suddenly that a lot of things that happen in the US will affect Australia quite quickly. It's not like last time where, you know, the US economy is quite independent to the Australian economy, at least more than it is now. We're just not really seeing that lag between countries now when something happens, because basically all of these central banks are working in conjunction with each other so much more now than ever before. And so something that happens in one place will definitely happen in the other quite quickly. For example, inflation hit the Eurozone, and then at the same day even, the market in the US is affected. It's almost no distinction between market to market anymore. I want to talk about inflation today. Let's start with the US 10-year Treasury. This is really quite ridiculous. As we were saying before, just a few days ago, there was a steep increase in the yield. That signaled to me as a debt market instability as investors rush to take the money out of government bonds because they don't think that it is safe to put it in there anymore. That was about the same time when the stock markets were having 52-week lows, S&P falling into bear market. This means that investors are not putting money in the stock market, they're not putting it into the bond market, so they basically have boycotted the markets in general because of fear. And this is not a good sign. But what's more ridiculous, as I was saying before, is the sudden decrease then. How could it be that overnight, the same investors who feared for their life gained so much confidence to put all that money back into the US bond market? And we suspect because that was about the same time as they announced that the ECB is having new special tools to prevent a meltdown or fragmentation, recession from happening. Whatever they're doing here is invisible to us, but it is obviously very inflationary as it brought down, once again, the yield curve. I just want to take you to these really interesting 2 articles, both by the CNBC. Headline number 1, this is from CNBC, US Treasury yields tick higher as investors weigh the probability of a recession. Headline number 2, 10-year Treasury yield, the same yield, falls as traders weigh recession risk. Excuse me? So here, both the traders are worried about recession risk, and in one case the yield falls, and in another case the yields jump. They're both by CNBC in the span of a day. So which is real here? Does the yield fall or rise when traders are worried about recession? One of them is a lie. You and I both know what is really going on though. How about let's give you my explanation of why we're seeing all of these rises and falls. So here, once again, was because investors were fearful and they mass exited the bond market. They didn't put money into the stock market at the time. It was just out of the system. They don't want anything to do with it. And so this has caused so much instability in the bond market. And also because it's not back in the stock market, it's not the inverse of each other. This has created a lot of illiquidity inside the system, such that the central banks had to do something, the US Fed in particular, had to do something, print more money in a way that we cannot see off balance sheet to ease off this instability, to let it pretend that there was more liquidity there. And once again, when they've done that, you can see investors are fearful enough to want to push it back up again. But then there's another force trying to push it down. This is what we're really seeing. And people who don't understand that this is going on think that, oh, this means that inflation is peaking. No, sorry, this is just a facade. This game of magic and guess the card here, this is a crafted facade of what's actually really happening behind the scenes. That means that we are in deep trouble at the moment. We're in deep trouble in the system. There's so much instability, but they can't tell you that, or else you'll panic and create even more chaos in the market. So they are trying to hide it by doing all of these shadow operations out of our sight, and they don't put it in the public balance sheet so that we can't see that. This is a very, very sad thing. This is telling you how much corruption and market manipulation is actually going on. As a result, a lot of the companies and investors kind of buying it. Actually, they are really buying this fake facade. So make no mistake about that. This is still a bear market, and it is still in bear market levels. But I guess it's a good thing that we're trying to claw some of those losses back. The S&P 500 has also put on some nice gains amid a very volatile week. The Dow also similar thing that's happening. It has increased since the start of the week. And Bitcoin also has increased by 400 points. And we are out of the 20K range, and we're definitely out of the 17, 18, sub 20 levels. This is mainly due to Bitcoin billionaire Sam Bankman-Fried bails out two crypto firms and give them some liquidity, and that has put some hope in the crypto community that things are not going to completely go into shreds. And $500 million, as much as it sounds, is only a very small proportion of this $900 billion. But anyway, this is probably the best good news that we have heard in a while. This has no doubt improved how Bitcoin has performed, along with, the Nasdaq also going up as well. Gold is under some pressure. It was at 1822, but as we were speaking just then, it went down to 1818. As the Nasdaq stock market increases, most of the time that does mean a drop in gold price, but if they were prudent investors, they will understand that it's only a facade, and I wouldn't be selling gold right now. But if you're gonna buy, it might present an opportunity. With everything that's going on, I honestly really feel this deep burden in my heart to remind all of us to remember to be vigilant and stay awake and stay alert and keep our eyes super open and learn to discern between real news and fake news, the facade, and then what is actually going on behind the scenes. This being able to discern truth from fake and then do the right preparations to be ready for the situations that will come up, this is a key skill that we have to learn. Let me share Matthew 25 with you, which is really deep in my heart today. Matthew 25, and it's a really well-known passage of the parable of 10 virgins. And you and I know that at that time, the kingdom of heaven would be like 10 virgins who took their lamps and went out to meet the bridegroom. 5 of them were not so smart, and 5 of them were actually quite wise. Some of them did not took any oil with them. They just took what they had and just lived life moment by moment and not think about the future. They don't think about doing any contingency preparations. But the wise ones took oil in jars along with their lamps. The bridegroom will never tell them when he is coming back. And this is sort of like part of the suspense and the mystery here. This is a reminder even today for us as we consider Jesus's return, and we don't know when that is. We need to keep aware though, and the reason why we're keeping out for all of this financial news is because from finance, we can see world movements or vice versa. We can then compare to what the Lord has given us in his book to tell us when he's coming and the signs to look out for. And the more we can then prepare for that, we know that this world will be on a one world government that will will be very, very antagonistic against the believers who hold true to his word. The one way that the devil loves to destroy a Christian community is by attacking the finance. This is the main reason why I begin this series, to help us all be collectively aware, and then we can prepare. If you have any ideas on how to prepare as well, feel free to leave that in comments below. I would love to hear from you. Has this series helped you in any way? If that has helped you enhance your community or your personal vigilance, please comment below. I would love to hear from you. We realize that when you need something and you didn't prepare for it, there may not be enough for both us and you. The key point of this parable is not just that you didn't have enough, but then because you had to take a detour, you've actually missed the time, missed the opportunity, and there was no place more for you and I. When things go super downhill and you'll be wondering, how did I get myself into this situation? But actually, you've heard this warning again and again and again, and you didn't get ready. You didn't get the Lord's church ready. You were not awake and vigilant. If that's you and I hope that this is a wake-up call for us.